welcome to Russell Investments Market Week in Review for the week ending August 30th, 2024. I'm your host, Zoe Wargans, and today I am joined by our investment strategist out of Sydney, Australia, Alex Cosley. Good morning, Alex. How are you?
I'm great, Zoe. How are you going?
Sad that summer's almost over, but, we're hanging in there. All right, so let's get this started. Last week, the central bank concluded its annual summit at Jackson Hole and signaled that the Fed is ready to start reining in some of the anti-inflation measures in the next month. So what are your takeaways from that?
Yeah, so the focus really was around Jerome Powell's speech, and he basically hinted that the time has come to start reducing interest rates. There were two key points to this. Basically, he's hinting that September is effectively a lock now. So we've been expecting a September rate cut for a while. The market is also expecting September, and he basically affirmed that. The second thing that I think he really highlighted is that the labor market has been loosening, and that they don't want to see any further deterioration from here. And so that also gives us a sense that this is not just a one rate cut or two rate cuts, but they're thinking about that path back down towards neutral, which we think of about 3 to 3.25%. So going from here, we expect that we're going to see effectively one interest rate cut per every meeting until we get to that 3.25%. So 3 for this year, and then we roll on through towards Q3, Q4 next year. The bigger implication that we are talking about right now is that we've been attracted to the tactical opportunity in US government bonds, in particular the 5-year government bond. And we still think that's a decent place to be, given that there are still economic risks, but that has kind of come in quite a bit. So the interest rate on the 5-year bond has rallied quite a bit. And so that attractiveness has kind of dissipated a little bit on the back of this excitement around interest rate cuts from the Fed.
I see. It feels like we talk about inflation every time I'm here, so it's kind of nice to hear that things are moving in a new direction. On the other side of things, earnings season in the U.S. is wrapping up. How are things looking, both here and around the world?
Yeah, so I mean, in the US, it's generally been quite good. So we've seen beat rates that have been a little bit better than normal. So that's an encouraging development. This week, everyone was very focused on Nvidia. It's been the stock du jour for the last at least 7 months. And there it was quite interesting that effectively what we saw is a decent result, decent guidance, but it just wasn't as good as what the market had hoped. And so we're recording this as of Thursday's close, and Nvidia is down 6.5%. And really it was around the fact that Q3 guidance was within the range of analyst expectations, but not at the upper end. And they also have this new chip that they called Blackwell that they're hoping to roll out in Q4, and there's still some production problems with that. And so those two dynamics just led to a bit of profit taking in Nvidia shares. But overall in the US, it's been quite healthy. If we look around the world, it's a fairly similar story. So in Europe and Japan, we've seen better beat rates than normal across for earnings. And in Japan, it's actually been better than expected on sales as well. And we've been seeing Japanese earnings revisions moving higher. And so there was a lot of volatility in Japanese stocks just 3 weeks ago after the Bank of Japan raised interest rates and the yen carry trade started to crumble. But when we look at the fundamentals of what Japanese corporates are saying and how they're performing, it still looks quite healthy.
Okay, great. You mentioned that the Japanese bank has raised interest rates, so a little different from what we're kind of expecting here in the US, and the picture's different in general in Asia. So what can you tell us about the policies and general rhetoric coming out of that side of the world?
The other interesting country in Asia right now is China. So they're still in this sticky economic situation where the consumer is very soft, property market is still quite tepid. Some of the policy measures that we've seen come out have been exciting at first, and then there hasn't been any real follow through. So that is still a concern and a challenge that we're seeing. And we're seeing economists starting to downgrade their expectations for GDP growth, both for this year and for next year. We do think that incremental stimulus will come in some form or the other as the economy remains weak, but it is going to be quite a slow process. So there'll be more fiscal policy that will probably be announced, but we might require a bit more weakness. And there is still potential for interest rate cuts from the People's Bank of China.
Interesting. All right, so things are happening all around the world. It was a pleasure to chat with you today, Alex. Thank you very much for all of that insight. And as always, thank you to our viewers. We hope to see you next week for Russell Investments Market Week in Review.
Hi, I'm Sophie Antal-Gibert, Head of Portfolio and Business Consulting at Russell Investments. If you liked what you just saw and heard, consider subscribing to our YouTube channel or check us out on LinkedIn. Thanks for tuning in.